Today, we're talking short-term strategies to capitalize on cash for crossbred calves, long-term strategic herd planning, and the million-dollar question: how long will high prices for beef on dairy calves and cull cows last? All that and more today here on the Uplevel Dairy Podcast. I'm your host, Peggy Coffeen, and my expert guest today brings nearly 4 decades of lending experience to this conversation, Steve Schwoerer from Compeer Financial. Whether you're considering expanding your operations or looking to optimize your current herd, this conversation will provide practical strategies to help you make informed decisions in this ever-evolving dairy landscape. This episode is brought to you by Compeer Financial. Compeer Financial is a member-owned farm credit cooperative serving and supporting agriculture in rural America. Their dairy team brings world-class expertise and tailored solutions to support dairy producers' financial goals and lending needs. Steve, you've been in this business for a long time. How many years have you been a lender?
Actually, in October, it'll be 39 years. So I started with farm credit. It wasn't exactly my first job out of college, but pretty close to that. And at the time, I needed a job, and it was a job. And 39 years later, here I am.
When you put it into that perspective, though, Steve, so you got into lending in the 80s, in the farm crisis era.
1986. It was rough the first few months here. Land values had dropped in half, and balance sheets were struggling. Cash flow was struggling. It was not a great time to get into agriculture. And of course, when I went to college, I didn't go to your typical agricultural college. I went to UW Whitewaters. I took mostly finance and business classes because, to be honest, with you, at that time, agriculture was probably not the profession that was desirable. But I had the farm background, and but I took all the finance and business courses through college, and that allowed me to get my first job. But yeah, it was tough sledding back in the 80s. It's amazing to see some of that land that in the late 80s was selling for $600 an acre is now the same land that's selling for 10, 12, and $13,000 an acre. And I understand it's 40 years ago. It's certainly how times have changed, and for the good, which is good to see.
Yeah, wow. So you've been in this business a long time. You've seen a lot of things and changes in the farm economy. And as you said, who would have thought that we'd be having this conversation today on the value of beef on dairy calves and also the high value of the dairy cows that we may not want in the herd anymore, but also looking at how to maximize those cows when we want to keep them in the herd as well and get as much milk as we can and as much lifetime value and lifetime production before we send them off, because goodness knows it's a pretty hefty price tag to replace them right now. But take me back for a moment to, do you have any early memories of the first conversations that you had with dairy producers that were doing the thing that bucked the system at the time and were starting to breed their dairy cows, maybe even some of those purebred Holsteins, to Angus bulls and beef bulls? Do you remember some of the early conversations when your producers that you work with started to do that?
Well, yeah, it's a time when the Holstein bull calf was only worth $50 to $100 a head. And at the time, you're just trying to maximize a little bit more money out of that. And then when the introduction of Angus and beef came to play, you're talking maybe you could get $200 to $300 for that animal. So at the time, you're trying to avoid the Holstein bull calf because the bull calf just wasn't worth a whole lot, and the beef calf could maybe give you another $100 or $200 more. But who would have thought that it would have got to the point where it is right now, where you're talking $1,100, $1,200, $1,300 for a day old beef calf? And actually, the Holstein bull calf has actually come up in value as well too. I'm hearing reports of $700 to $900 for some day old Holstein bull calves also. So it really has elevated. But when you look back historically, and cull prices are high too, which is definitely helped fuel some additional earnings for the operation. But if you look at the replacement animals, they're very expensive as well too. So when I look back at my lending career, 40 years ago, we always talked about the fact that you'd cull 2 cows to buy 1 replacement. And of course, back in that time, we're talking maybe getting $600 for a cull cow and costing $1,200 to replace her. And now, even though the replacements are much higher, you're talking anywhere from $3,000 to $4,000 to buy a dairy replacement animal. But it's still the same ratio: cull 2 cows and buy 1. So even though the cull prices have come up, it still takes almost 2 cows to be culled at good prices to buy that one replacement. So that ratio is still in effect today, even though they're much higher prices.
Yeah, isn't that something? The times have changed, but the rule of thumb hasn't varied a whole lot. And so that kind of brings us to the topic that we're tapping into your expertise on, Steve, today, is really the strategic approach to maximizing that ROI when it comes to beef on dairy and also making these decisions about culling and herd replacements, but really looking at that from a planning standpoint of how to capitalize on the short term. So let's start there, Steve, with the conversations that you're having when you sit down with your clients about the short term advantages, short term side of this conversation. What does that look like?
Well, especially when the beef calves are worth $1,100 to $1,300, it's a pretty easy conversation. Most people will take the cash today. But I do have a few producers that have taken a long-term approach and have actually sent a lot of their beef calves out west to be grown by a custom grower, and then they take them all the way to market, and they're actually able to get a little more money, additional profit out of that as well. Now, the only tough part about that is in making that transition. So from the day you want to do that, you got to keep in mind that you're going to lose income for the next 16 months. So if we say it's going to take 16 months for that calf to become a market steer, instead of getting that monthly that check for that animal right away, you're going to forego some income for those 16 months until that first group of animals actually gets to market. So in the meantime, you're not only losing the income from those animals you could have gotten if you sold them at a day old, but you also got to pay a custom grower per head per day as an expense until we get to the point of rolling that animal and getting it to market. It was easier to do that 4 or 5 years ago when that beef calf was only worth $200 to $300 to $400, but when it's worth $1,200 to $1,300 today, it's a little tougher. Now, those that have changed over that system are actually we're seeing right now some profits of in that $1,700 to $2,000 per animal range. So instead of getting $1,100 or $1,200 or $1,300 today, they're actually able to generate a little more income as well. It's got to be a long-term approach. You're going to have to sacrifice some income today and have some added expenses in order to get a little more long-term reward. But once you get those numbers rolling and you're selling a certain amount of animals every month, that's where the profits really start to increase a little more.
And Steve, when you're working with those clients that do choose to retain that ownership and follow all the way to market, are they utilizing any sort of risk management strategies on the final sale of that animal?
Yeah, some are, and I think you almost have to because when you're looking at 2 years out, you're going to have to do something like that. So through the LRP program, which is basically a program designed around protecting the calves and the market animals and even cull cows, you can buy some protection for that to guarantee those prices will be out there 14, 16, 18 months from now. Again, you definitely want to talk to your local agent about that. Any agent that sells crop insurance or works with dairy DRP will be able to help you with the LRP program. But there is a way to protect those prices because that's always the fear of you take the $1,300 today or try to forego that and get a better price 16 months from now, not knowing that price will still be there. So the LRP program kind of helps bridge that gap and gives you more security to know that those prices will still be available when that animal goes to market.
So there's that price protection that can be built in on the back end for looking at the 16-month investment. And when we talk about playing with what's going on in the markets, this is also a pretty great opportunity if a producer wanted to have access to cheaper commodities, corn and lock in some pricing on there to be able to really hone in on their costs. Is that something that you've seen more producers looking at as well? If we're going to ever feed out some of these animals, now's the time to do it because we can feed them out at a cheaper rate than in the past. Is that coming up too?
Well, definitely. And just like on the dairy side, where there's a nice margin right now, basically because of feed costs being down, it's even a greater margin on the beef side because we're talking about really good value for these animals come market time. And if you can feed them a lot cheaper now with some lower cost commodities, they're like even increases that margin even more. So I don't see a whole lot of guys that are raising their own animals on their own facilities. I see a lot of the animals that get raised long term being sent out to a grower. And in every situation is different. If you're going to raise them yourself, it's going to take maybe additional facilities, additional labor to raise those animals. You're going to have to feed them a little differently. So you have to maybe put them in a different facility to handle them. So I see most of the animals that are being raised long term are actually being raised by a custom grower in the western part of the country. Not to say that you can't raise them yourself at home, but you just need to have the right proper facilities for this. And sometimes that just makes it a little more difficult to do that. Every situation is different. You have to find out and look out what's best for your operation and really just to decide what's the best route to go.
Any examples that come to mind of conversations you've had where you've really walked through it with producers? Like, this is what it really is going to cost you to raise out these animals. What are some of the costs that you sit down and walk through that maybe perhaps we forget about or don't always account for unless you really sit down and drill in on those numbers?
Well, it really boils down to three things: labor, facilities, and the big one, manure. I mean, you're going to have more animals, you're going to have more manure. Do I have enough manure storage to handle the additional animals? Do I have enough labor? What the facilities they put the animals in, are they modern facilities or the older facilities? If they're older facilities, they may be a little more labor intensive to feed them, clean them, or to house them. So every situation is different. I don't see anybody really building new facilities to handle the additional beef animals. They're looking to use it with some existing facilities, but you have to look at those facilities and find out, are they labor efficient or not. If it's not labor efficient and it's going to cost you more labor, in the long run, you may be better off just not raising those animals and selling them as day old beef calves instead of taking a long term investment. So again, every situation is different, but really hone on those labor, facility, and again, the big one being manure. How much additional storage do I need? There's a cost to that as well too.
So, kind of three big key points there that you just brought up: the labor, the facilities, and making sure that we don't discount or overlook the cost of manure handling and what that's going to take to account for additional animals on site. So, this is what we've been addressing in this part of the conversation so far has been, what do we do with these calves? We keep them, retain ownership, move them out. But then the other side of this conversation is really looking at the bigger picture and the long-term plan of the entire dairy operation and farming business. What are some of the key things that you're evaluating as part of the bigger picture and long-term planning for some of the dairy clients that you work with?
Well, when we have those conversations, it's really a trickle down effect. So the first thing you always have to look at it, and we're in a situation right now in the dairy industry where it's somewhat processor driven. So the first thing you look at in operation is what's your 3 to 5 to 10 year plan. Are you looking at dairy expansion or not? Will your processor allow you to do some expansion? Those that are going a little bit expansion mode have to be thinking a little differently as to maybe I need to change my breeding program a little bit. Maybe I want to raise a few more dairy placements in the next couple of years to help fill that barn if I'm going to be expanding and also to maintain numbers in the future. So that plan might involve breeding more animals to sex semen to try to create more heifer calves, which would mean less beef calves. But if your plan is to do some dairy expansion, you probably would go that route. If dairy expansion is not in your game plan, then you try to maximize, you just raise as many heifer calves as you can to meet your needs right now. And then the rest you want to try to raise as many beef calves you can and maximize the value there. So it really trickles down from where you see the dairy going to be in the next 3 to 5 years, because we're looking at animals that are going to take 2 years to grow. And if we're breeding now, it's going to be 9 months from pregnancy to birth. I mean, we're looking at a 3 year plan here of where you want the dairy numbers to grow in the future. So it all depends what situation you're in. But again, it's you need to talk to your processor and find out what their plans are, and have your plans kind of map along with that and see how that fits for the future. I've got some producers right now that have a couple year plan to expand, so they're starting to breed a little more for dairy right now. So they're getting a few more dairy animals bred, knowing that every animal that you can raise yourself and not have to buy. I mean, that's $3,000 to $4,000 a head for every additional animal you can raise yourself and not have to buy is a huge cash flow advantage. Even though there is a cost of raising that heifer right now, we're talking the price we're talking, we can certainly raise them a lot cheaper than we can buy them right now. I don't know if that situation is going to change. I don't know what's going to make it change in the future. The cow numbers basically indicate that there's just not enough replacement out there. We've had some people that have that plan of 2 to 3 years from now, or actually 1 to 3 years of expansion. They're starting to change their breeding program already to make sure they have more heifer calves, not only to fill the barn initially, but then usually the biggest phase after a dairy expansion is the year or two after the barn is filled. How do I maintain numbers without having to buy them? So you're basically trying to keep the young stock inventory at a healthier level for 2 to 3 to 4 years until you can stabilize the numbers and have your young stock, have your herd right sized to where the expansion is going to take you. But that's a 2 to 3 to 4 year process, and those conversations need to start right now if that's what your plan is.
And when we look at that several years ahead, if there's one thing that you've learned as a lender in your 39 years, Steve, I would imagine it's that there's no perfect crystal ball for knowing where markets are going to go.
No, definitely. I mean, this and it is as profitable as the beef is right now. Things change, and it's based on supply and demand. If something happens worldwide, it can change it real quick. Right now, we're in an environment where I talked to a lot of these companies that pick up the beef calves from the dairy clients. They're basically saying they can't get enough beef calves. They would want more if they could. And there lies the problem. And I don't see this changing in the foreseeable future, probably a year or two or three down the road. There's only, again, the United States has had 9.3 million dairy cows in its inventory for probably the last 25 to 30 years. That number maybe fluctuates 100,000 plus or minus. But if a dairyman's first objective is to make sure I raise enough heifer calves for my own operation, or even some planning some expansion, because at $3,000 and $4,000 a head, you don't want to be replacing animals, then the rest may go to beef. There just isn't enough animals out there right now to meet the needs of the beef industry. We're seeing the cow to calf operations that were prevalent out west years back, they just aren't as numerous as they used to be. There was a heavy drought, a huge drought out in the western states a few years ago that really took a lot of those operations out and reduced the herd to where it is today. So, I mean, it's amazing that when dairy producers started breeding their animals to beef, the thought was maybe so many beef animals coming out of dairy would flood the market and this market would just be saturated and we'd have way too many animals. But just the opposite has happened. They just can't get enough. And it's good that the dairymen did that to actually supplement what could even be higher beef prices and worse supply had they not done that.
So, based on what you've seen and the numbers that you shared, I am going to ask you to speculate for a moment. If you could say that by this year, you foresee that beef market could be built back up to meet its own demands without such a heavy reliance on dairy filling the gap, how far off do you think we are?
Well, again, speculating is just a good guess. I'm saying I can see this market being strong for the next 2 to 3 years. It takes a number of years to build an inventory back up. And again, without the dairy herd is increasing either, so there's only so many animals to go around that can provide more calves. So I could be wrong, but I think we're looking for 2 to 3 years of really good beef prices yet. Again, barring some disaster that doesn't happen in the nation or worldwide, or some scare that creates a different demand structure on the consumer. And maybe the consumer drives everything. Right now, the consumer is willing to pay a higher price for beef. They enjoy beef and they go out on a Saturday night and they want a steak dinner. So as long as people are employed and are making good wages, they're still going to have high demand for beef. Again, all these circumstances can change, but I don't see that happening in the foreseeable future.
So when you look at the next few years ahead with a good indication from past experience and your time in this career, Steve, couple more years of these good times are on the radar in your crystal ball.
That's what I see based on just on the sheer numbers that are out there right now. If you look at the inventory, the beef animals out on the feedlots, the numbers just aren't there. We're at record low numbers for animals in the beef lots, and demand is there. So it's a really good combination right now. Low feed costs right now. It's a really, really good combination to have.
So, if there were a couple of key points that you would say are the take home messages about capitalizing on short term opportunities for the beef on dairy animal, that higher price tag on a cold cow, and low commodity prices, what would your key takeaways be to the dairymen right now?
Well, right now, look at your operation. Where do you see it going next 2 to 3 years? Are you expanding or are you staying the same? If you're staying the same, basically raise enough dairy animals to replace your herd to maintain numbers. Don't raise extra. Try to avoid the Holstein bull calf and breed as many other ones to beef animals to maximize the profitability there. It's hard to bypass $1,200 to $1,300 for a day old calf. I would say the best advice right now is sell those animals at the day old. Yes, there's always a potential for more profit by raising them out longer, but there's also potential for prices to change. There's also potential for death loss that'll reduce your profitability. So know your herd, know your operation, where does it want to be. As far as a culling strategy, the cull prices are still strong, but yet you still want to make sure you're culling the right animals. We want to cull animals that need to be culled. And actually, we've seen that the dairy herd grow in the nation a little bit recently with the lower feed costs. Even though milk prices, they're not strong, but they're not bad. There's still profit out there. There's still a good income over feed margin based on a low feed cost, or the tendency to milk a few more cows that are average production, but maybe we'll be leaving the herd in the near future. But make sure we cull what we need to cull, raise only what we need to maintain numbers, and then the rest is try to maximize and raise some beef calves. If you want to convert from selling calves today to long-term or selling them as market animals, understand what you're going to be losing, missing out on some opportunities for income in the near future, and also what you're going to have for additional expenses. So what I've conveyed to those clients that want to do that is maybe we need to set up a separate operating line of credit to bridge the gap to maybe have the cost of those animals being raised, not funded out of your cash, but maybe funded out of a revolving line of credit so that when the income does start rolling in at a higher rate, we have a line of credit that we can pay down. So it's difficult to have to pay for that out of cash flow right now. The cost usually put it on a line of credit and we'll pay it down. It was much easier to transition those animals 2 and 3 years ago when those beef calves weren't worth as much. Then the opportunity cost of losing income wasn't as great. But now we're talking much more. I think we need to look at everybody's situation and do it through a line of credit, not have to pay cash out of it, and then we'll pay it back when we get additional income from those animals that are being sold as market steers. We look at financial statements in the past 10 years, and you look at an income statement, 90 on a lot of these operations that are just dairy and don't raise any crops. We're seeing 92 to 95% of the income come from milk sales. When we look at some of the income statements today, based on the value of the beef calf and the cull cows, I mean, we're seeing that those beef sales can be something up to 20% of the total income. So it's just a tremendous opportunity to bridge the gap and add some income when milk prices were struggling a little bit. It's a great way to supplement that income. So this strategy has worked out tremendously, whether it was by design or just happened to be, certainly has caused a tremendous amount of income to be added to the operation. When you talk about diversification, this is one way to diversify the income. And then the other topic we talk about is because of the replacement prices being so strong between that $3,000 and $4,000 head, we're wondering if more people will raise extra heifers and say, hey, the extra heifers I can sell as a cash source. The only problem there is that those prices are strong today. If you have a dairy calf today, you're going to have to wait 2 years before you're basically going to sell that animal. So it's always hard to take that $1,300 you can get today from that animal, bypass that, and turn it into something else for the future. It's a great opportunity to diversify and have some additional income from those sales as well.
What we haven't touched on is any warning signs that we should be paying attention to. I mean, when things are good, you got to ride it out. But is there anything that's looming that you see that could be an indication of a watch out, of a risk factor or a threat in the marketplace?
Well, I mean, with the world economy, there's always that political structure. I mean, just like dairy, we export beef as well too, so that's what helps on the demand. So there's always that political risk out there. I mean, yeah, prices can change. Again, if we look at a supply and demand situation, they probably shouldn't be changing in the near future, but there's always that risk. We had the issue in Mexico with the screw worm, but something like that happened in the United States, that would affect things. It's very, very possible. But a lot of things are out of our control. Feed costs can change. I mean, right now we have a pretty good feed cost. Those can change, and that can change the profitability. That might change your outlook. It might mean maybe we're better off selling those calves earlier versus later. So there's a number of factors that can affect that. I don't see any huge red flags right now, but there's maybe some caution flags that always can pop up.
Thank you, Steve, for jumping in with us today and sharing your 39 years of lending wisdom working with dairy producers here in Wisconsin and beyond. As we discussed how to leverage the opportunities that are in front of us, plan for those that are ahead, and rounding out with the things to just keep our eyes open and awareness for as we plan for the next days and beyond. So, thank you so much for jumping on with me, Steve.
You're welcome, Peggy.
Thanks for listening to this Uplevel Dairy Podcast and our special guest today from Compeer Financial, Steve Schwoerer. If you like this episode and what you heard today, please take a moment to rate or review on whatever platform you're listening from. Those 5-star ratings and your reviews help us continue to keep growing the show and reaching people within our dairy community as we serve our industry together. I'm Peggy Coffeen, and until next time, keep on growing, keep on learning, and up-leveling your dairy.